Right, this is going to be a little bit stock talk after this huge gap up today and what I envision develops going forward, right? So, like I had said, after the 10% decline from January highs to the lows that we put in early April or late March, and the behavior overall on the time frame and the window that it developed in, we would get a pop, we would get a reversion, we would get something that would spark a push to that 670 to 680 range, discounted lower high area, into April CPI/April OPEX, where we will inevitably, ideally, put in an LPSY and get the reversion down, targeting those Q1 2025 highs at 613. And we got exactly that, right? We had the squeeze on the 31st, right? The last day of March, which is a pivotal day, the last day of the quarter. We have a lot of positions changing, delta buybacks, etc. And then we start to kind of develop a distributive range in this area, and we get a gap down that Thursday that is then reversed for a strong close on the 6th, or for a strong close on that Thursday, and then Friday we had Good Friday, right? We have a very low volume day that was put in on Monday, and I think a lot of this was awaiting the potential catalysts and binary events, right? We had a potential, quote unquote, civilization getting destroyed. You know, we had some things that could have potentially sparked a very aggressive move. And we had a gap down the following day on Tuesday that was rebid with a nice wick with some news to catalyze that reversal as well. And this all led to a huge gap up, right? About a 2.5% gap up, right into that kind of a little bit above golden pocket range, filling this gap from the 12th, and ideally beginning to start distributing internally here for a push lower. And now all this kind of is doing is getting a lot of people very bulled up, right? We're getting a lot of people that were once, you know, very bearish down here, very bullish up here. And it's just a tale as old as time. We had VIX that was sitting at 30 for a consistent amount of time, is now reverting back to 20, which is a more reasonable area for the option positioning. And this spike here is going to really, in my opinion, show itself as we approach CPI on Friday and we approach the VIX expiration and OPEX next week, the 17th and I think the 15th. I'm pretty certain it's the 15th, unless it's the following week. I don't think that's the case, though. So it's all kind of planning out, right? It's the same thing with QQQ as well, right into the discount, right into a gap fill from mid-March, and right off of this gap from August of 2025. Now, this is developing, I don't want to say exactly how I thought it would, but yes, to a T. We have catalyzing events that spark a reversal coming off of the end of the month flows and off of a 10% decline that showed preliminary signs of an accumulation kind of developing within this range. And it all really lines up with the window as well. So I think that the target going forward is going to be a short within here. We can fill this gap, we can put in a lower high, and then we can target, some areas below for some sign of weaknesses, and we can target these gaps. Now, it depends on what happens. We could see a breakdown, like a 655 sweep, a gap fill, a push into a lower high, a breakdown into this gap fill, a minor sign of weakness, and then we decline to the quarter one highs of 25. That would be my best bet, right? Where we lose 655, we break down under it, and we retest this for a lower high. I would not be surprised if that's kind of what happens here, because this is our previous floor from Q3 into Q4 of 2025 that was broken, absorbed, and now broken back above. But if we can kind of bid this and signal a path of least resistance, especially on like a weekly scale, because we really kind of had this failed breakdown underneath that area in March, that would be a little bit of my ideal scenario. And it's the same thing here with 589. If we can break down, this is actually the gap fill. So if you want to target a short position, this is very ideal for a short exposure going into OPEX. And then we can look like a 600 lower high, fill some of these gaps, right? And then get the breakdown here, right? That would be kind of an ideal scenario on QQQ. If you want to take like some May positioning to target this gap fill, and then some June positioning to inevitably target, in my opinion, 540 to 553. So I'm not really surprised that we get this gap up. I'm also not going to be surprised that this is inevitably, in my opinion, going to result in, ideally at least, a lower high in LPSY. And then we can play the minor sign of weakness that's going to happen off of 650 to 655, right? Oil getting melted here. Like I said, I think oil will continue to revert down to sub $80 a barrel. You look at like USO, this is continuing higher. but it's giving very distributive signs here, 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 and here, with very a very notable lack of progression as we attempt to mark up to new highs, and a very notable amount of volume put in at those highs. I think this will retest 92, which is kind of this previous 92 to 83, which is this previous kind of high from 2022 and from 2023, in my opinion. And then we will, I would think, continue to trade higher on that, right? When we look at a lot of energy names, a little overextended. And it's just the positioning in the informed party versus the uninformed party, right? And it's just kind of how those things work in terms of people getting bowled up and people getting really aggressive long and inevitably kind of being late to the party. And that's just what I think is going to develop. SMH, I initially thought this was going to be our UTAD. We filled these gaps and we're continuing to gap up into new highs, potentially at least. I want to see how this develops. A lot of individual semiconductors are potentially putting in lower highs. We're filling this gap here from the third on TSM to potentially trade down to 304. NVIDIA is not looking good. 185 being retested again for a potential lower high. And MU, this is a distribution, I think, that's been developing probably since November. This is a very aggressive distribution, I think, in my opinion. We break down underneath this range, 363, potentially trading into a lower high. They could pin us a little bit lower beneath the 300 spot into the future. And then AMD, right? This is a very notable distribution as well. You look at the weekly chart, you look at the really failed attempts to mark this up off of a sweep of this gap from October 2025. And I think the 227 is really the line in the sand, the March 4th, 2024 weekly highs, the March 8th climax that we put in, that topped us out back then. And this is a very notable distributive range back inside of this gap for ideally a fill, a loss of 227, and then a breakdown to sub $200 very, very soon. This is something that I'm actually going to be pretty confident in because notably, as we push to new highs, right, we have a preliminary sign. If you want to count this, we have a climax. For the UT, we have a reaction. This is a really big top focus of mine. We have a UTAD, and then we have a path of least resistance potentially being put in at 204, right? So in all honesty, I would not mind getting short AMD, right? This is a very, very notable distribution. I think that can mark you down from the 230 to 240 range down to the 180 to 170 range, right? This is very gross. High volume on the 6th of October, the highest we had put in on this name since 2018 highs, and a very, very notable distribution being put in, right? A lot of these names like Google, Amazon, Apple are getting these gap ups into like lower high territory. Meta as well. So it's something to keep watch going forward, in my opinion. I really do think that this was all kind of part of the plan. You could have longed this off of the reclaim of 655 if you wanted to be a little bit ballsy, but you can't really envision, like, you could have longed this in the close. There's a good opportunity to long this in the close on both of these names. You can't really envision that this was going to happen, right? It's a little speculative, but it did end up developing kind of exactly how I envisioned. And we look at LLY. We see the rally last week. We see the low volume breakdown. We see the very nice wick off of the progression gap in the lower high territory yesterday. Like capitulation off open. They bid that selling, and then they rally this like 5% into the close. 4% in the close. And now we're seeing continuation currently off of some progression gaps. Beautiful chart. I'm like break even right now, which I probably should have added a little bit more down here. But I think I can take this at least 35 to 40% to new highs. I'm still long Microsoft. This is a very clean chart, the reclaims of these gaps. This accumulation within this range began off of the report. I would like to take this to 440. 400 to 440 is kind of my target here for this trade, and it's probably aligning with like discounted lower high territory. I think this could get a gap up off the report. I will hold through the report if it looks constructive. We're kind of in higher low territory, reclaiming these April 1st and April 6th and the 0.5, those previous pre-market highs. As long as this daily close can be nice, we can get a good weekly candle leading into the expiration. I think this is going to be a very nice chart, right? We have like 4 lower lows. They could mark this up into the gap where the draw is going to be because, it's supply and demand, right? We see a lot of selling getting absorbed. The supply in this range is kind of being wiped. As you can see here. And the draw is going to be to an area where there's a large amount of supply. And I'm still looking at XLF. This would honestly be, in terms of a June exposure, one of my top watches from this 50 to 53 range to target 47. I think this can be an LPSY on a very aggressive distribution that has been developing since 2024. That should take out the $42 lows that we put in April. I talked about this a lot. We find our kind of top. We find like a 6% decline, or a 15% decline, sorry, and we're finding a lower high on already notable diminishing volume into a very pivotal range within this chart that should decline us into these gaps from April and May of 2025, right? And the big thing about this is that names like this and like a Schwab giving you these daily distributions in the context of weekly and monthly distributions is very pivotal, right? It's very, very pivotal because it's a major sector in the S&P 500. This and XLK are the two largest holdings, and XLK looks hideous, as we can see in a lot of tech names and semiconductors that are very, very heavily weighted within that sector. And it's important to see, and I really do think that this is going to be a generational short. This is probably my top watch in terms of June positioning. I do want to buy some June puts to target sub $47 because I think that can easily happen with the way that this melted down, found a buyer, and could potentially have a volume divergence into the lower high range directly into the expiration, right? 51's a big spot, but I would like to see it a little bit higher. UNH had a big gap up yesterday. I want to see how this develops because I wouldn't mind the lows being taken out. Nike, higher time frame accumulation, 1, 2, 3 lower lows, climactic volume and increasing volume coming in on each low. I still think this pushes $100, but it's a more long-term idea. I don't mind Oxy trading a little bit lower, still Commons focus. TSM, like I said, this is a distribution, right? We had the climax off of the report. We had a failure at this high, a markdown, another rally and a historic volume being put in on the January earnings candle. And then continued distribution, filling some of these gaps and potentially trading into a lower high range that can be shorted into either this gap fill or if you want to take some longer term positioning, this gap fill down here. Pepsi still looks really nice. I would kind of lean off the options exposure in terms of like you could long this and then wait to see what happens. At 158, that break above the creek where we had a previous floor was broken down under and used as resistance is going to be our pivotal kind of flipping point for the tape, in my opinion, at 158, where we've seen a seller kind of be very notable, and if we can get a gap up off the report next Thursday and a reclaim of 158, this should push 170 relatively quick. JD looks nice. MU distribution, this kind of began back here, in my opinion, with some preliminary signs. This was a climax, a reaction, and then we have like a UT, if you want to label it like that. The schematics don't necessarily matter as much as the structure and the risk to reward and the asymmetry goes. But this is a good opportunity. The thing about this gap up is like, this could be it, right? This could top out, but I think it's a product of time instead of the price being a focus, essentially, because we want to wait until CPI, see what happens then. You can wait until this gap is filled and then trade the lower high off that to target this gap from the 31st. Or you can wait until the expiration from when we really have those vintage charm flows leaving and kind of allowing the market to freely move. Because it is important to understand why those things are impactful and why a decline is less probable until those things occur. And especially because of the volatility that comes with a CPI report, we could potentially see a VIX crush, a vol crush, and like a flat open, and those contracts can lose some value. So that's really my focus, right? I think AMD shorts in the summer are going to really, really pay. I do think that we could have a Tesla summer. I want to see how this report goes, but this is a very notable area for this to find a higher low. And I do think the XLF is my main focus. In terms of the longs, LLY is a top focus of mine. In terms of the shorts, XLF is a top focus. Microsoft is a little bit of a shorter term trade in the report. In terms of a reversion vehicle, I wouldn't be surprised to see something like this where we have like a 6 to 7 to 8% gap up off of the earnings report and just not really push new highs and kind of distribute within this gap. And NVIDIA as well as a top focus. I'm a little bit like cautious on where I would take exposure. You could re-add exposure into NVD or NVDS here. I would love to see this 164 spot lost in a retest of the Q1 2025 highs at 153, but it's kind of dependent, like I said, on the timing aspect. That is the most important thing here is timing, right? That is very, very crucial in my opinion. But you look at XLV, looks phenomenal on a daily perspective, and a weekly look, and kind of same with XLP as well. But these are slow movers, but I think that this is where the rotations are going to develop into and have been developing into for a while, right? I think XOP and XOV are going to outperform. I think XLE can continue to outperform if we can find kind of a base and a higher low to develop. I think XLF and XOK are going to be the weakest names going forward. And I think that it's a very big red flag for the markets overall in general into Q2 that these names look like this, right? And so I talked about before, I think Q2, the beginning of it is going to be reversion into lower high territory, in the April expiration, in the CPI report, maybe into some earnings reports as well. And then after April OPEX, we can get some shorts, probably similar into May expiration as well.